Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the hidden corners of corporate filings to find out what is really going on. Today we are looking at Invesco Real Estate Income Trust, Incorporated, and their very latest report. And let me tell you, there is some interesting stuff in here about how they are structuring deals and managing their partnerships. So the big news here revolves around a new agreement, an amended and restated limited partnership agreement for their operating partnership. Think of it as a major update to the rulebook for how this partnership works. This update is tied to their Delaware Statutory Trust Program, which is basically a way to set up real estate investments. What is really changing are these new types of partnership units they are authorizing. They are calling them Class SPR1 and Class SPR2 partnership units. These new units are important because they can have investor servicing fees attached to them. That means a portion of the money generated by these specific units might go towards paying for services that help investors. The key players here are Invesco Real Estate Income Trust Incorporated, acting as the general partner on behalf of itself, and the limited partners, and a special limited partner. This agreement really smooths out the process for how profits, or total return as they call it, are shared. Specifically, it talks about how the special limited partner gets a portion of the return from these new SPR1 and SPR2 units, with a certain amount, a 6% hurdle amount, that needs to be achieved before that profit sharing really kicks in. It also lays out specific rules for when these units can be converted or cashed out. Now, this next part is about how they manage the selling and servicing of these investments. Invesco Real Estate Exchange LLC, which is part of the Invesco empire, is acting as the DST sponsor. They have entered into an amended and restated DST Dealer Manager agreement. This is another big update to an existing agreement, and it is all about the sales process for these real estate investments within the DST program. This updated agreement touches on how investors who buy these real estate interests might receive different classes of units like Class KPR partnership units, in addition to the SPR1 and SPR2 units we just talked about. It also clarifies what happens when these units are redeemed, meaning when investors want their money back. The company has the choice to give investors cash or shares of their common stock. The specifics here can get a bit detailed, but the important takeaway is that the type of shares investors receive upon redemption can depend on the initial selling agreement. For example, fees for Class SPR1 partnership units and Class SPR shares can be as much as 0.85% per year of the value of those units or shares. There are also specified fees for Class SPR2 partnership units. These details matter because they directly impact the net return an investor will see on their investment. Looking at the bigger picture, these amendments are all about providing flexibility in how Invesco Real Estate Income Trust Incorporated structures its real estate offerings, manages its partnerships, and handles investor relations within its Delaware Statutory Trust Program. They are creating new classes of units and establishing clearer rules for how they interact with investors and partners, especially concerning fees and redemption options. Overall, these new agreements seem designed to make the Invesco Real Estate Income Trust Incorporated's real estate investment products more adaptable to market demands and specific investor servicing needs. They are clearly trying to create a more streamlined and potentially profitable structure for themselves, while offering various options to investors. Now, let's talk about what this means for the company and its investors. From a company perspective, this shows a proactive approach to refining their investment structures. By introducing new unit classes and updating agreements, they are likely aiming to attract different types of investors, accommodate varying fee structures, and potentially improve the efficiency of their operations. The ability to offer different share classes upon redemption provides a layer of flexibility that can be beneficial in various market conditions. For investors, the introduction of fees and different redemption options means they need to pay close attention to the specifics of the agreements they sign. Understanding the fee structures, conversion rights, and redemption choices associated with each unit class will be crucial to maximizing their returns and ensuring their investment aligns with their financial goals. The company is essentially modernizing its operational framework. This is not a small cosmetic change. It is about fundamentally altering how partnerships are managed and how investors are brought into the fold. The implications here point towards a company that is looking to grow and adapt within the real estate investment trust sector. The introduction of new units and the detailed breakdown of their redemption and fee structures suggest a mature approach to product development and investor management. When we look at the risks, the complexity of these new structures could introduce new operational challenges. Ensuring compliance and clear communication to all stakeholders will be paramount. For investors, the key is due diligence. They need to understand exactly what class of unit they are buying, what fees are associated with it, and what their options are for redemption or conversion. The success of these new structures will hinge on their ability to effectively attract capital and deliver strong returns to investors. In conclusion, Invesco Real Estate Income Trust Incorporated is making significant adjustments to its partnership and dealer agreements. These changes appear strategic, aiming to enhance flexibility and potentially profitability within their Delaware statutory trust program. While the specifics might seem dense, the underlying goal is to optimize their real estate investment offerings. It is a sign of a company that is actively managing its business and seeking to adapt to the evolving landscape of real estate investment. Alright, that is our breakdown of Invesco Real Estate Income Trust Incorporated's latest filings. What is your take on these new partnership structures and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.